Welcome to episode 3 of series 2 of our OR Talks podcast. Today I'll be joined by two special guests to discuss property. Here are your hosts, Neil Seeger
and Mark Jovanovic.
So for those of you that don't know, we have Tony Archer with us today. Tony is our property partner, property expert.
Yep.
He knows all things about property.
Yep.
And we're going to ask you hopefully a few questions that we know the answer to.
Yeah. Okay.
I've got the list of questions. Are all right.
Good.
So before I go into that, you can see we've got some nice blue tablets in front of us. They are actually M&Ms. They're chocolate M&Ms.
Okay.
That was part of that's your fee for being with us.
That's my fee. Yeah, I was a special request. That was for and some proper hairstyling. But hey ho, you know.
Tony has been the biggest diva we've had on the pod so far.
Yeah.
Well, you had to go shopping for the
makeup artist.
Did you really?
No expense there, dear.
Yeah,
no expense.
Yeah, I'm still not convinced they're actually M&Ms, but I'll take your word for it.
You've got to try one, really.
Okay. No, I'm on a diet, so I'll try one in a minute. They don't look that appetising now, actually, do they?
Well, you requested though.
Yeah, okay. It's not the Matrix, is it? The blue pill and the red pill. But yeah, sorry. Anyway, carry on.
We painted a couple of the red ones blue, just to
did you?
it. Yeah.
Oh, okay. Yeah. So I don't know which universe I shall be in. So it'll be the property universe.
Well, hopefully it's the property universe.
Yeah.
So if anyone's wondering what they've tuned into, it's not an M&M debate.
We are
going to talk property.
We are going to get into the facial stuff eventually.
We're going to talk about stuff. Yeah.
So from a property point of view, and I'm actually going serious now for a second. So from a property point of view, in your world, Tony, what sort of services do we cover?
So we'll cover really all range of anything to do with property. The world of property and tax is a very quirky one, as I'm sure you're aware. You know, it covers so many different areas, from income tax and corporation tax if you're a company landlord, or income tax if you're a personal landlord, stamp duty, land tax when you're buying property, and there's loads of different rules and reliefs that are available with that, capital gains tax when you're selling property, inheritance tax when you're doing sort of planning for the future, and VAT if you're dealing with commercial property. So it literally touches every area of tax really, and that's why we like to think that we're a specialist in it, because the world, as I say, is very quirky and it touches in lots of different areas really. So we'll cover all of those areas.
And we are very equipped for those as well.
Yeah. I've got a good broad range of knowledge in relation to property, but I'm very fortunate to have some very clever technical people, present company excluded.
That was a compliment then.
That was good. I was going to say something nice.
Of course, I meant included, not excluded. But I'm very fortunate that we have got a lot of technical experts that support me whenever I don't know things. As is life really, we're always learning new things, aren't we? You know, and there's usually some strange scenario. When people go into the property world to buy properties, there's definitely not a one size that fits all.
No.
It's all about your personal requirements and your drive, or what you're trying to get out of it really, where your end game is. And that can be people want to give up the day job and become a full-time property landlord or investor. They're doing it because they want to supplement their pension. They're doing it because they want to give some wealth to the kids. It's any and all of those reasons really. So and that's why we like to think that we're very capable and competent at helping you make the right decision and getting your structure and helping you with your plans and what you're trying to achieve and where you want to go really.
Yeah, so I guess when someone goes into buying a property, the reason they do it, that will change over time as well. So like you were saying,
absolutely.
To the children,
Yeah. So a lot of people that do exactly want to get into property because they're looking to replace their employment income, they automatically, for instance, jump to a limited company. They think a limited company is going to be the best route for them. But of course, if people are basic rate taxpayers, then you might want to start with buying property in your own name, because typically mortgage rates are lower for individuals,
Yeah.
but of course the basic rate tax band for individuals is 20%, whereas with a limited company you're paying corporation tax, and then if you need that money to supplement your income, you're then paying dividend tax on top of it, which can be more expensive. But yeah, it's all down to what you want and what your personal circumstances are exactly.
As we always say, case by case.
Case by
isn't it?
case, and always be prepared.
Yeah.
Always be prepared.
Always be prepared, and that's
Yeah.
I mean, a lot of the things when old people come to me about property and they're looking to invest in them, and we have quite good working relationships with a couple of professionals that refer stuff to us. I will talk to them, and a lot of them will say, "I'm going to be a limited company from day dot,"
Yeah.
and then it's, well, actually, if you're going to buy one property and just stick with that, and that's fine, you know.
Yeah.
You may have it in your own name, but if you're going to buy 10, then
Yeah.
it may be a case of, it's not all about today, it's about 5,
Absolutely.
10 years down the line. And what
Absolutely.
actually the strategy will change, as you say.
Yeah,
But
absolutely.
it's then the stamp duty world that baffles a lot of people.
It does, yeah.
You know, a lot
Stamp
of-
duty land tax.
Stamp duty land
Yeah.
tax, sorry. Yes, sorry. You
Beat me
see,
to that.
that's why I'm not the expert.
Yeah.
And that baffles a lot of people.
It
Because
does, yeah.
then if you buy it, a lot of people, there's a myth out there, and a lot of people say this to me, that if you buy a limited company, it's the first property that's owned by a limited company.
Yeah,
So therefore, you should pay the lower rate of stamp duty,
Yeah.
land tax.
yeah.
But you don't. You still pay the 5%.
Yeah, that additional rate, absolutely. Yeah, so I mean, stamp duty, land tax definitely is. All of the taxes are a minefield, really, but stamp duty, land tax is one that hits you right at the very beginning.
Yeah.
And there's lots of reliefs available. You know, it's about the residential rate or the non-residential rate. Multiple dwellings relief is another
Yeah.
stamp duty, land tax relief people miss when you've perhaps got a property that's got a granny flat, an annex to it, basically. So there's loads of things where you can explore reliefs that are available and just try and use them to your benefit, really.
So what does
Absolutely.
that? What is a multi-dwelling? What
So
does that mean?
basically, if you've got a scenario where you've got a granny flat at the back, or it might just be an annex on a property, and if it's got separate services being supplied to it, so gas, electricity, and it's got its own front door, and it's kind of more or less separately accessible, then you can basically get your stamp duty land tax costs reduced because you take the average of the rates that apply to those properties. So yeah, there's loads of things like that you can do it with. So, but it has to have it be a standalone property, a dwelling, i.e., the clue's in the name really, multiple dwellings really. So,
Yeah.
Yeah.
Just because I wouldn't have known what that is.
No,
It's
and
not-
some professionals don't, you
Yeah.
know. So it's always just double checking with ourselves if you ever get into that situation. So the thing that's a lot of people have been caught out with over the last couple of years has been the paying far with capital gains tax as
Yeah.
well. So where people have sold property and there's a capital gain on it, they just assume that that's going on to their tax return for the following January. But of course, the rules came in a couple of years ago where you originally had 30 days to pay it, but now you've got 60 days to declare and pay the capital gains tax on any properties that you rent out. So not your own home, but a property that you're owning for investment purposes, for rental income, basically.
Yeah, that catches so many people out, doesn't
It
it?
does,
And it's
yeah.
not just when it's sold, is it? If it's gifted to your children or something.
Absolutely.
Because a gift counts for capital gains
Yeah,
tax.
absolutely. Yeah.
So what does that mean then, Mark? So if I sell my rental house on the, I don't know, the 31st of May, let's just say,
Yeah.
2022. Let's
Yeah.
just use some dates out there. Then my capital gains tax would be due.
Within 60 days from the completion, yeah. So you have to report it. You have to report it online, which isn't easy either.
Yeah,
Jump through
yeah.
some hurdles.
Okay.
And then pay it within that 60 days as well.
Even though my tax return's not due until
Yeah.
March 2023, when I don't actually pay the tax, as in from my tax return point of view, until January 2024, I've still got to pay it within the 60 days.
Yeah.
Yeah.
Oh, that
Yeah.
catches you out, doesn't it?
It
does.
does catch a lot of people
It does.
out, yeah, because people automatically think it just forms part of your tax return.
Well,
But
it used to back in the old days.
That's
didn't it?
right,
You know?
yeah.
That's the confusing. It still
Yeah.
does. It still has
Yeah.
to go on your tax return as well.
Yeah.
But you
Yeah.
still
You've got to pay it before.
Yeah.
Yeah, absolutely. Yeah.
Well, at least you're paying it when you've received the money, so you're not going to be
Absolutely.
scratching around in 18 months' time thinking,
Yeah.
oh, I saw this house, I spent
Absolutely.
all the money, what am I
Yeah,
going to do?
yeah, yeah.
So it's quite, it helps you in that way, I suppose.
Yeah.
I think that's the idea from HMRC's point of view, isn't it?
It's to
People have
collect
got the money,
tax
get it
quicker.
quicker.
Yeah, absolutely.
Bring it
I think
forward.
that's all their plans, in fact, isn't it? Really.
Yeah.
So, but yeah, the property world is definitely an interesting one, but it's not necessarily always just about tax either. You have to consider things like risk too, because, for example, if somebody was doing a rent-to-rent type arrangement with another landlord, then that's basically guaranteed rent that you're paying the landlord.
Yeah.
And if, for instance, I know it's extreme circumstances and it's probably unlikely, but you didn't have any income coming in, you're still guaranteed to pay that landlord that money. And that means that your name is on the block. So a limited company potentially might just give you that little bit of extra protection, really. So when it comes to risk, it may be that the risk is low, but it's just having one eye on risk, just to making sure that you're not exposing yourself to anything. I was waiting for you to jump in.
Unnecessarily, really, unnecessarily. So because if you are sort of exposing yourself unnecessarily because you haven't thought about, and you've only gone down the angle of tax. Actually, it's as you probably said, it's not just about tax. It's about the whole picture, the whole package.
Yeah, absolutely.
What is the objective and what are the risks exposed?
Yeah,
and when we go
absolutely.
through it when I go through it, particularly with, I'm sure we go through it with all when we go through our clients, is we'll sort of list out what the objectives are and then what the pros and cons are.
Yeah.
Not really a SWOT analysis, but that sort of thing really.
Yeah,
Actually,
no, absolutely.
what's the risks that you're gonna face with this, and things like you did a rent to rent, which is becoming. I mean, I'm seeing it more and more. Rent to rent.
It's an easy way to generate some income without outlaying the capital. So it's definitely worth pursuing, but it all depends on your personal circumstances and what you've got. If you've not got a lot of savings, for instance.
Yeah.
But the other area, apart from risk, is the lenders themselves. I'm sure you've both seen over the last couple of years, lenders have got more and more fussy about
definitely.
things like the SIC code, for instance, the Standard Industry Classification Code for companies.
And that's on Companies House, isn't it?
That's what gets shown on Companies House. It basically declares to the world what the company's activity is. Lenders do not like to lend to companies that have got multiple activities going on. That's not to say that they don't, but it just reduces the field of lenders that's available. And the same goes to also how you structure your company with shares. So if you want to bring in your family, your children and aunties and uncles and trusts, etc., if there's multiple shareholders in there, again, it can cause some concern for the lenders too. And again, it's probably narrowing the field of people that you can talk to, really. So don't make it overcomplicated, but obviously it just feels sometimes that you're having to sacrifice tax efficiency for borrowing purposes, but that's just the nature of the world we're in, I think, really.
Yeah, especially with the way interest rates are going, I guess.
Interest rates, and just the lenders wanting to have their security, basically. So that's just a couple of things to think about. But it's all about, as long as you go into it with as much knowledge as possible and your eyes wide open, then hopefully you're not going to fall foul of any hidden nasty surprises, really. So.
Well, that's it. And I spoke to a client a couple of weeks ago who was buying an investment property for a HMO.
Yeah.
So that's a house of multiple occupancy.
Yeah.
Mark's nodding at me. Mark done, good boy.
I'm impressed.
Thanks. So, and what we were talking about there was they were looking to buy it in their own personal name, which is fine, but also creates a bit. So, from a tax point of view, that in their personal name was maybe not the best option.
Yeah.
But then they've got a lot of people living in that property, and we decided to go down the route of a limited company in the end because it becomes with two, which touching on the two things we spoke about a minute ago. From the tax point of view, they're going to receive some good rental profits, hopefully. Yeah. And also, there's the liability side of things.
Yeah.
Because then they can protect themselves if the insurance policy wasn't to cover them for that angle.
Yeah.
It's all those sort of things that Nat touched on both.
Yeah.
The thing that caught that person out in that particular scenario was the stamp duty.
Yeah.
They were not aware of the stamp duty rules at all.
Rates,
So when they're trying to put a deposit in, they thought, oh, we're honky dory here. Then a large chunk of it's been swallowed up by the stamp duty land tax.
Yeah, absolutely. Yeah, no. There's lots of different variations, as you've touched on with HMOs, and buy-to-lets is probably one of the most common ones, but we do see a lot of HMOs, and that can be problematic with local authorities and the licensing procedure. but we see purchase lease options, PLOs, where people, have a guaranteed price to buy the property at a later date. But the other area that people like to spend some time in is serviced accommodation and holiday lets, basically.
Yeah.
Again, another completely different set of rules, because VAT comes into that. Because you're typically providing a service, so that becomes a taxable supply. And if you go over £85,000 worth of income, then in effect you should be registering for VAT. But there are schemes that you can take advantage of, potentially. And TOMS, the Tour Operators Margin Scheme, is one of those schemes if you're dealing with holiday lets. But again, there's a whole bunch of criteria and conditions, and that's probably a whole podcast all on its own.
So just touching on that, so if I rent out a residential house, so like,
Yeah.
I don't know, a 4-bedroom family home,
Yeah.
there's no VAT because that's residential.
Yeah,
Yeah.
so
If I-
residential lettings are exempt from VAT, so in effect you can't register for VAT. Absolutely, yes.
So then, if I buy a commercial unit,
Yeah.
whether it be a car garage or whatever, if I rent that out,
Yeah.
that I cannot, and I've opted tax, I can put that on that.
If the property itself is opted to tax, yes,
Yeah.
then you've got to go through that opt to tax yourself and VAT registration, depending on the circumstances, because there are loads of if, buts and maybes. But
Yes.
generally speaking, if you had an opt to tax and you opted tax, then yes, you would be able to charge that and claim that back on. But don't forget, if you're doing both residential and commercial with VAT on in the same company, then you can only claim the VAT back on the bit that's got the option to tax on. And then you're into the world of what's called partial exemption, where you have to work out the VAT that you can claim back on those costs which factor both. Accountancy fees is a good example of that.
Yeah.
So a percentage gets applied to, but again, loads of conditions with the de minimis rules and all that kind of stuff.
So, with that example, so with the service, not with the service charge, that's completely wrong. With the partial exemption,
Yeah.
so that will be, just an example of that would be, I'm just going to, so I've got a shop at the bottom,
Yeah.
okay, which is my family shop,
Yeah.
and above it I've got an apartment, for
Yeah,
example,
yeah.
and I rent that apartment out, that's residential,
Yeah.
and then downstairs is my shop, which is commercial.
Yeah.
Okay, right. So I'm just getting that straight in. So
Yeah.
I understand where we are then.
Yeah, so but in that scenario, it's probably unlikely that the property itself is opted to tax, because you've got part commercial and part residential. Again, it depends, because there's loads of quirky stuff out
Well,
there.
there's stuff that jumps out, and,
Yeah.
and that's it,
Yeah.
though, isn't it? This is just to give people a flavour. This is
Absolutely.
not to give everyone an answer. This is
Yeah.
a sort of give
Absolutely.
an idea what's out there.
Yeah.
What things mean
Yeah.
really.
Yeah.
Because certain words that like partial exemption sound
Yeah.
baffling.
It
And
does,
it
yeah.
can be baffling,
Yeah.
but in simple terms, it's not.
Yeah.
But in reality, when we start looking into the fine details,
Yeah.
it's quite there's ifs,
Yeah.
buts, and maybes, as you probably
Yeah.
say.
That's what we're here for, isn't it? I guess
Yeah,
to go through every
absolutely.
kind of circumstances which are
Yeah.
going to be different and explain like all
Yeah.
the little technicalities.
How to structure things.
Yeah.
As you both touched on at the beginning, really, things change, don't they?
Yeah.
Life changes, the tax rules change.
Yeah.
So you try and do the best with the knowledge you've got now. And we talk about structuring companies for activities, don't we? So typically buy-to-let properties are investment activities. So we'll put that all into one company. But if we were doing flips, for instance, in the world of property, buying property with the intention of refurbishing it and selling it, that's trading activities. So technically and typically we would keep that in a separate company, one for your investments and one for your trading, really. There are more tax advantages for trading companies than there are for investment companies. And typically that's around inheritance tax and capital gains tax. Rather morbidly, they're kind of end of working life and end of physical life tax relief. So inheritance tax relief, obviously for when you pop your clogs, and also capital gains tax for when you sell the business or dissolve the business. Those are available for trading companies, but not investment companies. So serviced accommodation, furnished holiday lets, those sit slap bang in the middle, because they get the CGT allowance. If you were to sell your company that was a furnished holiday let, you would get capital gains tax relief, but it doesn't qualify for inheritance tax relief. So again, you'd probably want to keep that in a separate company. So there's kind of 3 separate companies potentially going on here.
They're doing different things.
Yeah.
Doing different things, and that might sound like a ploy for limited companies, accountants to get loads of fees for accountancy fees, but it's generally because of the tax reliefs that's available. If you're just going to dabble in one of those areas, then and the wealth and the value that you're going to build up is going to be inconsequential, then we're all for keeping things simple, aren't we?
Yeah.
Do it all in the same company if you wanted to. But if it was something that you were going to develop and grow, then definitely to keep it all in a separate
Exposing
company.
different things if
Yeah,
you put it into one.
that's
company.
it,
Because
yeah.
what you don't want to do is get a nice, you have a really nice sort of rental property, you have a really nice whatever. You do a flip that goes bad and you lose everything.
That's right. That's the other reason for keeping it separate. Again, risk. Looking at that risk side of things.
So that's not tax, that's risk.
Yeah.
It is,
And that's
absolutely.
where our world comes into an awful lot of
Yeah.
a lot of areas, really, isn't it?
Absolutely.
So then
absolutely.
the other type. So you've got the residential, then you've got your commercial, then you've got obviously your sort of your holiday lets and whatever. So my holiday let that is effectively in my mind a residential because people go there to go on holiday. That's a residential activity. But that sort of thing, if I'm sort of selling or having more income of over 85,000, I have to VAT register that
That's right.
because that's a service.
It's a service because it's furnished. It's a holiday accommodation. Then you may be providing laundry or cleaning, etc., etc. So therefore, it is akin to a hotel, really. You're not too far from a hotel, and you're providing that service. So therefore, from a VAT point of view, it's a taxable supply.
So, because people will get that confused because I would think that's residential because it's not a factory, it's not a unit, it's not activity, it's those two. So that's how I would view it. But
absolutely. Yeah,
but it's not how I would view it. If I was not to know what I know, I would view it that way.
Yeah.
Absolutely.
It's not as straightforward as you think, is it? That's
it is. Yeah. No. Absolutely. And these days with the prices of accommodation in the UK, especially if you're in a desirable area such as Cornwall, for example, then you could easily get to 85 quite quickly. Really. Even when it's only for certain months of the year.
4 months of the year.
But again, there's a whole bunch of conditions really attaching to whether it qualifies as a furnished holiday let.
Yes.
And also there are different rules in different jurisdictions, i.e. Wales, for example, where there are changes coming with the rates of businesses. So there's always lots of things to consider about. And stamp duty land tax, for instance, is called land transaction tax in Wales. So again, you've got to look at the jurisdiction where you're working, really.
Yeah.
So,
and that's where you contact the likes of us. So I'm thinking about doing this. I've got this pot of money. What do you think from a tax point of view? Obviously we can't comment on the return of investment and that sort of thing because that's not us.
No,
but we can comment on the protection side, the tax side, and all that sort of side of things. That's specialism.
There are lots of property knowledge bases online, and a lot of them are very good, but some of them, maybe are more about the property management side, not so much the tax side. There are some things that we could argue we're a bit aggressive in HMRC's eyes. So we as accountants always have to have our clients back and have one eye on making sure that what they're doing wouldn't be subject to a challenge by HMRC. But if it was subjective, we would always try and find the right angle that would fall on the right side of the law, but be a reasonable answer to a scenario. There are lots of things that are subjective, aren't there?
Yeah, there are. A lot of the things you see online as well are very general, aren't they?
Yeah.
So everyone's case is going to be slightly different. It's not going to take advice from a mate in the pub on taxes. And it's never going to apply to your circumstances. Everyone's slightly different.
Yeah, absolutely.
Which is why it's worth coming and speaking about what your situation is. And get the bespoke advice to yours rather than just
That's it.
A general
That's the word, bespoke, isn't it? Absolutely, it is. Yeah. So. We're all individual.
Case by case basis.
Just be prepared.
Yeah.
Much better to prepare in advance.
It is, like we've said, really, situations change. If you're a higher rate taxpayer now, and you've started a property company, then once you retire from your job, you could then have loads of basic rate tax band left.
Yeah.
You could actually, if you wanted to continue buying properties, have some in your own name. Sometimes it's good to have that flexibility because if you needed money quickly for some reason, if you've got property in a company, you've got corporation tax to pay on any profit in the company, and then when you take the money out of the company, you've got dividend tax to pay again. So yes, you'll have capital gains tax on a property in your own name, but that once that's done, then that money is yours, and you can do whatever you want, buy a speedboat or sail around the world or whatever it is.
So is there anything that comes up in your world that people misunderstand, they get wrong very, very often?
It seems to be that there is some misunderstanding regarding the changes for Section 24, the mortgage interest. So about 7 years ago maybe now, the HMRC decided to start reducing the amount of tax relief you could get on mortgage interest. Which basically now doesn't act as a deduction against your profits at all, but instead it works in a slightly different way. You still get tax relief, but it's called a reducer now. So whatever your interest is, 20% of that, it's capped at 20%, is deducted from your tax liability. But a lot of people still don't quite they think that it's gone. You don't get any tax relief at all for mortgage interest. But it's still there, but it works in a different way. But it's restricted to 20%. So it's not, if you're a 40% taxpayer, you're not getting 40% tax relief as you used to get.
Yeah, I was going to say they're the people affected, aren't they? Higher rate taxpayers and additional rate taxpayers. Basic rate payers, it's no different really, is it?
So effectively, back way back when I was allowed to have the deduction, as in the actual producer. So I made a £60,000 rental, or I've only got rental income, let's keep things simple. So I made a £60,000 sort of effectively had an income of 60,000. My only expense was my interest, which happened to be 10,000. Okay, so it takes my income to 50. So therefore, I'm effectively saving 40% tax on that. Interest, Whereas the new rules, effectively, I pay on my total income is 60,000. And then I'll calculate my tax at 40% on that. And then I will save 20% on the 10. So therefore, that's why the 40% taxpayers are worse off. Because they're paying a bit more, aren't they? Really.
And hence the exploration by lots of landlords really and property investors to try and get their properties into a limited company. And there are ways that you can do it. Some of them are a little bit convoluted, and some of them really, if they're just done for tax purposes, then it's likely HMRC is not likely to give you the relief during that process. So it's weighing up the pros and cons and looking at. I think HMRC are quite pragmatic about lots of things. It's got to be commercial. The reason why you're doing things, does it make sense really? They're not going to say, well, we're going to quote section so and so. They will fall back on that. But fundamentally, they say, well, what does it make sense what you're doing? And if it doesn't, then those sort of scenarios won't work. But that's not to say that we can't explore certain avenues. But we always like to try and stand the right side of the tax man.
Of course, we do. So just go back onto the interest. So as an individual, obviously, I only get my reducer at 20%. If I'm in a company, do I get the deduction of the whole mortgage?
So you do, but of course the corporation tax rate is only 19%. So really, I think that's where a lot of people think that, it's going to make a huge difference. Well, it's not, because the corporation tax 19%, so you're only getting the same as what everyone else gets. The only difference being if you are fortunate to be able to get it into a limited company, then obviously it's out of your personal income and therefore you're saving 40%. But if you need the money to supplement your income, then you're probably no better off, because then you're paying higher rate dividend tax instead, as well as corporation tax.
But if you've got a well-paid job, let's just say I'm a doctor, let's just say I'm on £200,000 a year.
I wouldn't come to you if you were.
What would you not? You don't want, it's my blue pills that's put you on. Sorry, my blue M&Ms. So look, 200 grand that I'm earning, so I wanted to invest in property. At that moment in time, I'm probably better off putting it into, and I don't want to take the money because I don't need it. I'm quite happy on my salary. At that point, I'm happy with a limited company, and I want it to organically grow into this nice property portfolio of 20 houses for me to retire. I should have a good pension as a doctor, but if I don't, and I've opted out of it, and I put it all into property, then that's probably a good decision at that point, isn't it?
Yeah. Obviously, the main issue for moving properties from yourself to a limited company is typically you're going to have capital gains tax, not always, but you'll certainly have stamp duty, land tax, and you'll have legal conveyancing cost as well. So that you might not have any capital gains tax depending on your circumstances. if you live there, for example, and you've got some principal private residence relief, but you'll certainly have SDLT, and then it's weighing up how long that's going to take. If you've got a mortgage on the property as well, of course, again, some lenders will let you port the mortgage across from individuals to companies, but not all of them. And then if you're in a fixed period, then all of a sudden you've got to weigh a penalty up as well. So all of a sudden it becomes quite a few years before you start to see that difference. And depending how old you are and when retirement's coming, it may just be that it's not worth it and you're better off leaving it in your own name, basically.
That's something people overlook, isn't it? The capital gains tax and the SDLT, because they're not receiving any money for transferring it into the company.
There
was no money changing hands here. So why is there tax?
Why is the tax? Absolutely.
It doesn't work that way.
They don't say it's separately against to do that. It's a separate person, effectively.
Absolutely, and people think exactly that, I'm transferring from myself to a company that I own, so that's the tax rolls.
So with the protection comes a couple of there's always got to be some choice at some point. And it goes back to what you said at the start. What's your driver? Is the driver long term? Because the driver's long term, paying a bit now, isn't long term is going to be a benefit. But if your drivers, you want the income now and quickly, it might not be the right option.
No, absolutely, and. Yeah, absolutely.
It is all a bit of a gamble though. We don't know what the rates are going to be doing like the budget next week. We don't know what's going to happen. I mean, capital gains tax has been talked about for some time, hasn't it? So the last 2 years and the last couple of budgets, it's been top of the list, hasn't it? But who knows? And of course, we can factor a budget in, but how long is it before we have a change of government?
Exactly. Or change a budget with the same government.
Absolutely. And maybe the monster raving looning party's now got a chance to win. I think you might say we've already got one of those.
Let's get away from politics.
Stay away from
politics.
It's
bad enough for the tax legislation and then politics as well.
Avoid that area completely.
Is there any other areas that come up as a common one?
It's I think apart from those main areas, it's serviced accommodation seems to be quite a popular one with the VAT. So we've talked about that. Mortgage interest rates, structuring of limited companies, and can we put children on it, that sort of thing. So it's common for ordinary trading companies too. Trusts can be used and there are advantages for doing that. If you want to protect some of the assets, what you've built up, through your business working life, so that's the trust owning shares in your property company, which is good. It protects the assets. I think you can get capital gains tax relief, can't you, by transferring some shares into a trust? Mark will confirm that, hopefully. You can. But it allows you to have some control over it, because typically the parents who might be putting shares into the trust will be acting as trustees, so they're still having a level of control, but it's not putting the assets or the shares directly into the children's hands, so that A, they don't spend it all, or B, have an unfortunate bad relationship which ends up with financial settlement. So it gives a layer of protection whilst still getting the parents typically, to have control. So but again, as I mentioned earlier, you just got to have one eye on the lenders, and if there's a trust owning some shares, that's when lenders can be a little bit twitchy. I think they need to understand it really. So, but I think that's it. So that's most of the areas. So hope that was useful.
It's time for your next lot of makeup, I think.
I'm going to go for the blue pill.
That's Steve. What do you think? Would you give him out of 10?
Was it an M&M or?
Or was it one of the red painted ones? One of the red painted ones. He's going to the property side of things now. Well,
Tangy.
Thank you for being with us today, Tony. Thank you.
Thanks for having me.
You've given us a great insight into the property side of things, and actually answered all my questions.
Good. It's good to hear.
Thank you very much.
And hopefully any clients that come our way, we can also answer your questions and give you a bit of feedback as to what direction you should be going in.
On a case-by-case basis?
Yes, on a case-by-case.
Thank you, Tony.
Thank you.
So thank you, Tony, for your time and being with us and answering all our questions. I think me and Mark both found that very useful.
It's good.
So on to our next guest. We are very privileged to have Molly with us from our service charge side of the business.
Hello.
Hello. So welcome to the podcast, and hopefully you enjoy your time with us. So firstly, what is service charge?
Okay, so technically you'll be familiar with service charge if you ever lived in a flat. So it's a cost that's collected from residents that live in those flats to cover the communal maintenance of the residential buildings that you live in. So you can also have service charge in relation to commercial buildings, so like we've got offices as well, and shops of course. So in simple terms, if you buy a flat, you'll have to pay service charge to cover all the maintenance costs which you and your neighbours share. So this could be things such as like the lift maintenance, the gardening, the insurance, like if you need a roof repair, stuff like that really.
And the hallway being vacuumed, hopefully.
Yes, exactly.
They never come in though, they never come in the vacuum. I only get it on my hallway. Honestly. Is it just me in my apartment that has this problem? Or, I leave the door open and they still don't come in.
Most people don't think about that, do they? Like who looks after the gardens?
And it just happens, doesn't it?
It just happens. It magically happens.
Having the car park like jet washed and maintained, and the hedges trimmed, and actually it looking presentable. We just pay this monthly amount, thinking, well, what on earth is it really for? But that's what the service charge is.
Things, that's it. So those monies, they legally belong to the leaseholders. So whoever lives in the flat. There's no profit or loss at the end of the year, but there's just a surplus or deficit which will have to be paid or refunded to the leaseholders. So the usual structure is there's a freeholder, so they will own the land or they could own the building as well, and then there'll be a landlord who will also own the building, and then sometimes there'll be a managing agent, and obviously you've got the leaseholders that live in the flats. So when you administer service charges, it can be complicated and time consuming. So most landlords will employ a managing agent. It's quite self-explanatory what they do. To do the work on their behalf. And they will usually deal with the leaseholders. The agent will. So
do all the legwork and everything for them.
Yes. Or the landlord could do it himself. It's entirely up to them.
So it's just a case of So the person that I moan at when my head hasn't been trimmed is probably the agent. And then they will probably then obviously instruct somebody to come and do it. And
they'll usually have a property manager that will look after your set of flats, and they will arrange those works to be done.
If I'm paying a monthly fee, I want it all sorted. I'm sat in there,
man.
Exactly. Obviously, the hallway is a nightmare.
So some people wonder how the landlord knows what costs they can recover through service charge. So those are detailed in a legal document known as the property lease. So every leaseholder will have a copy of one of those. So if you really want to scrutinise it and go through everything that should be happening, you can do that.
Which we all do, obviously. As soon as we get a rental place, that's the first thing I check.
Usually like 40 pages long.
That's what we all do, terms and conditions, isn't it? We read them like...
don't waste my evenings, I tell you. Don't waste my evenings.
No. But some will literally sit there and penalise them. So, like Neil. So, obviously you asked as well who might need service charge. Well, that was my next question, but you've took the words right out of my mouth. So I don't need to know.
I'm not going to introduce that one then. Molly's got that one for me.
So landlords need to prepare service charge accounts to show they've spent the monies demanded from the leaseholders. So they'll send you a demand, they'll collect that money, then they've got to show how they've been spending that money. They haven't just been keeping it for themselves. So the leaseholders are entitled to receive the accounts for the same reason, obviously, just to see where that money's been going.
So it's all open and transparent basically then, so there's nothing getting stored away and...
No, it shouldn't be.
Going to pay for my yacht.
No, we
I
probably
can't. Don't tell everybody. My tenants don't know this. I live in the same block. I can't tell them.
No, exactly. So obviously at Ormerod Ritter we act as the independent accountants that specialise in service charge. So usually we act on behalf of the agents. So they would appoint us, and then we would look at all the records and we would produce those accounts so that the agent can then distribute them to the leaseholders.
It's a bit like the independent third party basically that's giving the outside view of this is what's happened, this is money received, where it's been spent.
No cars have been brought, stuff like that, no iPads. It's just all service charge.
Oh, there goes my plan then.
Allowable through the lease.
I'm signing the apartments. They're going.
So do you check what it is in the lease then, to make sure that what's going through the accounts matches the lease, what's allowed to be spent,
So we have to do a lease review sheet before.
Right, okay.
And obviously tick off everything that's in their budgets is in the lease. So cross-reference, make sure everything's as it should be.
So that's reassuring from a resident's point of view.
Yeah.
Because if I'm paying how much it is, £100 a month or whatever I'm paying, at least actually I know first and foremost it's right to my contract. So I'm going to sit there reading a 40-page document in the evening. And equally, it's being looked at by a third party who's not actually just going to be saying, well, those car payments actually went on the roof.
Yeah, exactly.
You know. Yeah. I bet people try it somewhere. So actually, it's reassuring that's looked into.
Yeah.
So like our fees for doing that, do they have to pay that separately, like the leaseholders, or is it in the service charge?
So it's in the service charge. So is that like paying our fees?
Yeah. So is that like an additional fee that
that's
they pay on
it. So
top?
it'd be in the budget. It'd go through the service charge, and then the agent would arrange for those monies to be paid from that client bank account to us.
So it's a free inspection for me, from a tenant's point of view, isn't it? Really, I'm not paying any extra for this. It's included.
Yeah. No,
so,
it is. Yeah, it'll be in your budget.
So if my hallway is not vacuumed, it's because your price has gone up. That's what it is. That's was it in the budget?
But yeah, we can also do it for the landlords as well. If they've got some information they've kept, we can also collect that for them.
Yeah. So I can come as a landlord directly to you. I don't have to have bid with an agent or whatever.
No.
If I'm doing it all myself, I assume regardless of whatever, you have to do a set of accounts, whether you're just the landlord or whether you're the agent doing it on behalf of a landlord. You have to do service charge accounts, I assume.
Yes. Yeah.
I pay tax on that. I suppose it should net out to a surplus and deficit, I suppose.
Yeah, so there'd be no
there shouldn't be any tax on
Don't
that.
bring tax into this.
We got Mark. We have to use Mark's ability somewhere.
It's not for profit, isn't it? So
it's not just here to look good. We have to use his bit of knowledge somewhere. You know.
We're trying to do something useful.
Exactly.
You've done your property tax. That's not me.
Tony, please have a question.
But yeah, so obviously as we've said, it's like a really highly specialised area. So the accountants that work on it are, trained in service charge, not just any random accountant looking at it. Because no offence, but you probably wouldn't know what you were looking at.
Yeah.
Being tax and.
How's your water, Mark?
I was going to say, I'm loving this. She put you in your place there.
It's not so. I've just got a burn here. You want any aloe vera for this burn I've just had? Oh, I'm just a tea boy, to be honest.
Right.
So I don't know. I don't really know much about this, to be honest. But yeah, so any random accountant couldn't do this. Yeah, it actually specialised as much as I guess.
Oh yeah, it's better to have a specialised accountant. Yeah, we're trained in it. Yeah,
well, because we all have different specialisms, and we say this all the time.
Yeah,
like Mark's is tax. Mine is actually sort of accounts, not service charge accounts, but just any accounts. I'm a general one.
Yeah.
And then we've got specialists in all areas. So what we always say is we have got specialists. So it is actually. We've got people that specialise in loads of different areas. Like we had stamp duty, land tax a minute ago. We've got VAT. We've got different specialists. So actually, you're as much as we jest, it is actually true that it is good to have a specialist person who that's what they sort of their sole job mainly is to look at that sort of things.
Yeah, it's a niche area, isn't it? And not everyone's going to know that we offer this service either. So.
No.
Exactly, and that's it, isn't it? And it's knowing when you can use that service, and actually when you should be using that service. Certain things you look at being obvious, like if you got to pay stamp duty, land tax, then you should be talking to a stamp duty land tax expert. But you don't ever think of a service charge expert, do you? Really, not in a general thing. But actually, it's little things like checking that things are agreeing back to the contract. And as a general accountant, I wouldn't know that. You don't actually. Here's the money coming in. Here's the money going out. I know it's not for profit, so therefore it should work out. Or it's a deficit. But it's that actually it sounds quite simple when you're checking it back to the lease. But if you're not a specialist, you wouldn't think about that.
No, because there can be these things called sweeper clauses in the lease, so that would just say.
Is that the hallway?
He's obsessed with his hallway.
I want it swept. No? Okay.
No, it's actually just to say that if there's any services the landlord also thinks should be carried out that aren't in the lease, he can carry those out.
Okay, so ad hoc things that.
Yeah, it just clears that up. Not every lease has that, but some do have a super clause. Yeah.
Oh, so that's quite good then, isn't it?
Not so you can buy a car still.
No, obviously it has to be with it. Has to be for the property. Yes.
Something that's reasonable for the property needs.
Course,
yeah. So if it's not in there and all the windows, something happens to the windows that wasn't ever thought about,
exactly.
then it, or there's a law that comes in that has to have that change. Like there was, there's loads of cladding and loads of fire things that come up. In the last probably 5 years, really. Those sort of things that aren't going to be in the contract because the contracts might have been done, 10 years ago.
1980, like
some of them
really
have been
old.
Yeah, so they don't have to get renewed like the leases.
No, they can. No. They will have a term, so yeah.
Yeah, so it stays
in place.
So therefore, so then that's where that sweeper clause comes in, doesn't it? You're just thinking the hallway now. I can see it. So when that sweeper clause,
I was thinking of football. I was sweeper in football.
Oh no, I'm not very good at that. I wouldn't know. I wouldn't. Whatever my that football stuff is. So but I was on the hallway. I'm thinking about properties. Yeah. Nothing else gets swept. That could be the car park.
Yeah, car park.
Could be the car park being swept.
You
have a clause for that.
Yeah.
So it's those sort of things that actually might be covered, but not be covered by the contract. So a sweeper clause is actually probably quite a good idea. Yeah. Otherwise, you'd have to bring out brand new contracts to be able to bring in the things that aren't on the list.
And get everyone to agree to it being added in, So.
Exactly. And you've got 30 people in the same building; they're all going to agree.
Yeah.
So that's actually it's opened my eyes. Actually, I wasn't aware of. Well, definitely, I didn't know you went through the contracts and that sort of thing. That's definitely my eyes.
Yeah,
I've learned a lot there. Yeah.
So that's as much as I've gone into it really, because it is quite a big.
Well, you can go into it all day. As we said when Tony was here, we could actually go into the property thing as its own standalone, complete podcast for 4 days straight.
Yeah.
So, and without a break, actually talking about all the different things that come up, because it's all you've got all very different properties. You've all got very different things. You'll have, service charge that relate to, places where you've got a commercial unit and a residential unit as one. So, what did we say that was earlier? The park exemption VAT.
Yeah.
There's all these sort of things that come up, and sort of what we spoke with Tony about, what we're speaking to you about, they sort of overlap a little bit.
They really do,
Because you will have a commercial service charge and a residential service charge, and maybe both in one business. Which keeps things nice and simple, I can imagine.
There's so many variables of property, isn't there? Because it's gone forever.
Yeah, and different. You probably have different contracts or different lease agreements. You have different costs that will come up in the commercial side to what come up in the residential one.
Yeah, that's very true.
An awful lot of different things will come up, and different not covenants and that sort of stuff, but certain things you can do with that building. You can't actually have that apartment as a hairdresser salon. It's residential. But actually, you can't have the car garage that's downstairs as a hairdresser salon either.
No.
Because it's a car garage. Yeah. So there's certain things that are in contract. So I can imagine quite a lot of the service charge sort of world about income expenses, but it's also about the legal side.
Yeah, absolutely. Yeah, that's right.
Yeah, how interesting. You never think when we start talking about service charge, I never thought we'd start talking about legal sides.
Nor did I,
and sweeping hallways and that sort of side of things.
Yeah. There you go.
I have no more questions on service charge. Have you, Mark?
No, nor have I. I've been when someone asks me now what service charge is, I'll be able to tell them. So
I can tell them. I can tell them. Go and speak to an expert because general accounts.
General accounts.
Don't know what they're talking about.
Yeah, don't phone Neil up and ask you about service charge because Molly's not happy about that.
Sorry.
It's all right. It's all right. I can deal with it. It's all right.
It's just like me taking a phone call about tax. It's not a good idea, is it?
Oh no, but you didn't fire a shot at Mark.
I'm saying it's between you two.
Yeah, well, we can tell that the service charge accounts and the accountants don't get on. You can tell that, can't you?
Everyone needs tax, so
everybody needs you. Yeah, generally, you're not a general tax guy. But do you want a blue M&M, by the way?
Yeah. Okay. They're very small. Is it an M&M?
Oh. Don't ask me. Tony sampled.
Well, no, it's Tony's.
No, they're Smarties.
I was going to say, they do look like Smarties.
They're not M&M's.
Oh, right, okay, right then. So we'll have to get some new ones for Tony next time he comes on.
Yeah, they're Smarties.
Oh,
well, Tony never said, did he?
He didn't. No, he didn't put that out.
Just took a handful and
he did just took a handful and walked out. He did.
There's no like M on them though.
Can you tell what?
There's no M. They have an M on.
I thought that as well. Yeah, but
yeah,
we might have gone
rubbed off.
Yeah. I thought it might have gone non-brand.
Yeah, non-brand. Yeah, we can't advertise those. We'll have little ORs on the next ones. That's what we'll do. Well, thank you for giving us an insight into service charge, and hopefully, anyone's got any questions or worries on service charge, then please contact Molly.
Yeah.
And Molly will be happy to answer all your questions, worries, and queries on those.
Okay, fabulous.
Thank you for being with us. Thank you.
Thanks for joining us today. I hope you've learned a lot about property and everything we can offer on that. Next time, we're going to be learning about employment tax and payroll. We're going to have 2 special guests for that, Neil.
2? Oh.
That's it. We're fully booked now on this part.
We keep getting 2s.
We do. If you've got any questions on it, give us a WhatsApp on 01905 777 600. Thanks for joining us.